In a remarkable turn of events that underscores the intersection of politics and cryptocurrency, the value of Donald Trump's meme coin $Trump surged dramatically following an announcement of exclusive events for its top investors. The announcement, which has drawn both excitement and skepticism, offers the 220 largest holders of the coin an invitation to a private gala dinner with the president scheduled for May 22 at the Trump National Golf Club in Washington, D.C. Additionally, the top 25 coin holders will enjoy a more intimate VIP reception with Trump himself. Following the announcement, Trump's value soared by more than 70% according to data from crypto trading platform Coinbase, though it still remains significantly below its peak price of over $74 achieved shortly after its launch in January. The coin, which is part of a broader array of cryptocurrency ventures associated with Trump, who has self-styled himself as the crypto president, currently boasts a market capitalization of approximately $2.5 billion. While the prospect of mingling with the president has certainly energized investors, many in the cryptocurrency community have expressed doubts about the legitimacy and implications of such a move, labeling it as a mere publicity stunt. Critics have pointed out that the meme coin phenomenon often serves as a vehicle for speculation rather than genuine investment, usually attracting those looking to capitalize on the excitement surrounding celebrity and internet culture rather than sound financial principles. Interestingly, the launch of Trump's coin coincided with significant legislative actions in the crypto space. Shortly after returning to the White House, Trump signed an executive order establishing a presidential working group aimed at formulating new regulations for cryptocurrencies. This move, alongside the creation of a strategic Bitcoin reserve, reflects a growing acknowledgement of the cryptocurrency market's relevance in the modern economy. Moreover, Trump's media company recently announced plans to introduce exchange-traded funds ETFs that will encompass digital assets, reflecting a broader trend of integrating cryptocurrencies into traditional financial products. These ETFs are expected to offer investors a regulated avenue to engage with digital currencies alongside stocks. Amidst this backdrop, the cryptocurrency landscape is also grappling with serious criminal undertones. A significant recent incident involved a $243 million crypto heist that culminated in the kidnapping of a couple in Connecticut. The case highlights the perilous intersections between the burgeoning crypto market and organized crime. This high-profile heist, linked to a group of young men from Miami, involved a sophisticated scheme where the victim was manipulated into surrendering access to his cryptocurrency assets, leading to a staggering loss. Investigators have since uncovered that the perpetrators were members of a notorious online community known as the Calm, which has evolved from a hacking underground to a more organized form of cybercrime. The incident illustrates a concerning trend where online criminality spills over into real-world violence as the kidnappers sought to leverage their victims' wealth for ransom. The implications of these developments are multifaceted. On one hand, the rise of meme coins and the increasing interest from high-profile figures like Trump signify a growing acceptance of cryptocurrencies in mainstream finance. On the other hand, the accompanying rise in crime related to digital currencies raises critical questions about security regulation and the ethical responsibilities of those involved in the crypto ecosystem. Looking ahead, the cryptocurrency market is poised for further evolution, especially with entities like the CME Group announcing the launch of XRP futures set for May 19, 2025. This expansion into derivatives highlights the demand for regulated crypto products as institutional interest continues to grow. As the industry wrestles with both innovation and the darker aspects of its rapid growth, it is clear that the future of cryptocurrency will require a delicate balance between fostering innovation while ensuring security and ethical integrity in an increasingly complex digital landscape. As economic uncertainty looms over global markets, investors are increasingly turning their attention to traditional safe havens like gold and the digital alternative Bitcoin. In 2025, gold has surged by over 30%, reaching all-time highs, while Bitcoin, often dubbed digital gold, has seen a resurgence in interest, recently reclaiming the $90,000 mark. This raises an essential question for investors: which asset is the better buy in the current climate? According to a recent analysis by BlackRock, Bitcoin's unique characteristics as a decentralized and scarce asset may position it as a viable alternative to gold, especially during times of economic turbulence. Although Bitcoin is often perceived as a risky and volatile investment, its potential to serve as a safe haven asset is becoming more apparent. The report notes that Bitcoin has historically demonstrated uncorrelated performance, with major asset classes offering a potential hedge against stock market declines. BlackRock's examination of Bitcoin's performance during significant geopolitical shocks such as the COVID-19 pandemic and the Russia-Ukraine conflict reveals that Bitcoin often outperformed gold in the weeks following these events. In fact, during 6 major crises analyzed, Bitcoin outperformed gold in 5 cases over a 60-day period and in 3 cases over a 10-day period. This trend suggests that as investors re-evaluate Bitcoin's role amidst economic instability, perceptions of its risk may shift. Despite gold's strong performance in 2025, Bitcoin is not to be overlooked. The cryptocurrency has shown remarkable growth over the past decade, consistently emerging as one of the best-performing asset classes. Data from TradingView indicates that since the launch of the iShares Bitcoin Trust in January 2024, Bitcoin has outpaced gold with a staggering 116% increase compared to gold's 68%. This trend highlights Bitcoin's potential for substantial returns even in a year where gold is soaring. As for Bitcoin's immediate future, analysts are closely monitoring market movements. Following a recent rally, Bitcoin is currently facing resistance levels around $96,300 with immediate support at $91,700. The recent uptick in institutional interest has been a driving force behind this momentum, with Bitcoin spot ETFs seeing net inflows exceeding $700 million, contributing to overall bullish sentiment. However, the cryptocurrency market remains volatile, as Bitcoin trades around $92,500. It has seen slight dips with a 1.2% decrease on one recent trading day. Despite this fluctuation, experts believe that the asset is establishing a psychological support level aided by institutional accumulation and a bullish market backdrop. Looking ahead, the interplay between Bitcoin and gold in 2025 will likely depend on broader economic conditions and investor sentiment. With ongoing geopolitical tensions and economic uncertainties, both assets will continue to be scrutinized as potential safe havens. Should Bitcoin's narrative as a digital store of value gain further traction, it could very well challenge gold's long-standing dominance in the realm of safe investments. In conclusion, while gold currently retains its status as the leading safe haven in 2025, Bitcoin's potential to act as a complementary asset is becoming increasingly evident. As investors navigate the complexities of the current economic landscape, the evolving dynamics between these two assets will be pivotal in shaping investment strategies in the months to come. In a striking turn of events, the value of Donald Trump's Dollar Trump meme coin has experienced a remarkable surge following an invitation extended to its top 220 holders for a private dinner with the former president. This announcement, made via the coin's official website, catalyzed a price jump of up to 58%, lifting the cryptocurrency's market value back to $14.32. This resurgence, however, only partially counters a staggering 88% decline from its peak of $75.35, which was recorded shortly before Trump's inauguration in January. The promotional dinner, scheduled for May 22 at the Trump National Golf Club in Washington, D.C., promises attendees an intimate opportunity to hear from Trump about the future of cryptocurrency. The website marketing the dinner enticingly notes, "Our leaderboard updates hourly in real time. Your Dollar Trump coin count puts you in the running. The competition is fierce. Own Dollar Trump or watch from the sidelines." The top 25 holders will be granted an exclusive VIP reception with the president, further fueling interest and investment in the coin. Trump, who has proclaimed himself the crypto president, has made significant moves in the digital currency space, launching various ventures such as NFTs and a cryptocurrency platform called World Liberty Financial. His administration's recent initiatives, including signing an executive order aimed at fostering growth in the cryptocurrency sector, underscore his commitment to making the U.S. a leading player in this rapidly evolving market. Despite the excitement surrounding the dinner offer, the promotion has drawn sharp criticism from lawmakers and ethics watchdogs. Senator Chris Murphy referred to the event as the most brazenly corrupt thing a president has ever done. While Tony Kark, executive director of the nonpartisan group Accountable.us, stated that Trump is openly inviting investors to have a bidding war over who can buy the most access to him, while he laughs all the way to the bank. The Trump coin, alongside its counterpart launched by Melania Trump, reflects a growing trend of meme coins that capitalize on celebrity culture and internet phenomena. These cryptocurrencies are often criticized for lacking intrinsic value, with many investors treating them as speculative assets. The phenomenon mirrors the trajectory of other meme coins like Dogecoin, which gained popularity through viral marketing but often struggles to maintain long-term value. As the cryptocurrency landscape continues to evolve, Trump's influence and ventures will likely remain a focal point, especially as his administration hints at loosening regulatory oversight. Recent announcements from his media company, including plans for exchange-traded funds ETFs that will incorporate digital assets, indicate a broader strategy to intertwine traditional finance with the burgeoning world of cryptocurrencies. Going forward, the interplay between Trump's political ambitions, his cryptocurrency ventures, and the regulatory environment will be crucial in shaping both the future of his meme coin and the broader cryptocurrency market. As investors react to the dinner invitation and potential changes in federal policy, the implications for both Trump's legacy and the cryptocurrency sector are profound and warrant close attention. In an era where cryptocurrency remains at the forefront of financial innovation and volatility, Ethereum ETH is experiencing a tumultuous phase that has ignited debate among investors and analysts alike. Recent trends suggest that while the price of Ethereum has shown signs of recovery, challenges loom large, prompting discussions about its long-term viability as a leading smart contract platform. On April 24, Ethereum's price surged by 25%, primarily attributed to Bitcoin's BTC historical support pairing, which provided a much-needed boost in the market. This uptick, however, comes against a backdrop of declining network activity and institutional hesitance. According to Lucanchain data, significant players in the cryptosphere such as Galaxy Digital have begun reallocating their assets, moving away from Ethereum and into competitors like Solana SOL. This shift raises critical questions about Ethereum's future as it contends with both internal and external pressures. Charles Hoskinson, the founder of Cardano and a co-founder of Ethereum, recently made headlines with stark predictions about Ethereum's fate. During an Ask Me Anything session, he posited that Ethereum could face extinction within the next 10 to 15 years, likening its potential downfall to that of BlackBerry and MySpace, once dominant entities that failed to adapt to rapid technological advancements and shifting user preferences. "I don't think Ethereum will survive more than 10 years to 15 years, Hoskinson stated, pointing to structural weaknesses in its accounting model, virtual machine, and consensus mechanism. As Layer 2 solutions proliferate, Hoskinson warns that these platforms may inadvertently fracture the Ethereum ecosystem rather than fortify it, leading to decreased unity and increased competition. The internal divisions within Ethereum's community, combined with the allure of more efficient systems, could further exacerbate the platform's challenges. His comments resonate deeply in the current climate where Ethereum's network activity has plummeted to multi-year lows and key metrics such as transaction fees and usage rates have followed suit. Despite these concerns, there remains a faction of investors who believe in Ethereum's potential for recovery. After Vitalik Buterin's recent Risk V plan announcement, network activity saw a brief resurgence, momentarily lifting investor sentiment. However, the overall outlook remains cautious. Standard Chartered has even adjusted its ETH price forecast for 2025 downward, reflecting growing skepticism about the platform's trajectory. Moreover, the recent data indicates a significant shift in investor behavior. Paradigm, another notable player, has reduced its ETH holdings, moving thousands of tokens to centralized exchanges. This trend of institutional withdrawal suggests a broader lack of confidence in Ethereum's current architecture and its ability to compete against emerging technologies. In conclusion, as Ethereum navigates this challenging landscape, the discussions surrounding its future are more critical than ever. The combination of waning institutional interest, structural challenges, and fierce competition from other blockchain technologies paints a complex picture. While some investors remain hopeful for a resurgence, the underlying issues highlighted by industry experts like Hoskinson could pose significant barriers to Ethereum's long-term success. As the cryptocurrency market continues to evolve, all eyes will be on Ethereum to see if it can adapt and thrive amid mounting pressures. In a significant development for the Solana blockchain ecosystem, Rockaway X, a prominent crypto venture capital firm based in Prague, has announced the successful closure of a new $125 million fund aimed primarily at supporting early-stage projects built on Solana. This move comes amid a notable slowdown in crypto venture funding, yet reflects Rockaway X's enduring confidence in Solana, a platform it has backed since its inception in 2018 when the concept of the blockchain was still emerging. Victor Fisher, the CEO of Rockaway X and an early adopter of blockchain technology, emphasized the firm's strategic focus on fostering application development rather than competing with new Layer 1 blockchains. Rather than investing in more L1s, we focused on building applications on Solana and being the first user for our founders, Fisher stated. This approach has proven fruitful. Rockaway X's previous fund, launched in 2021, has reportedly returned over 5 times the invested capital, buoyed by successful early investments in Solana and other noteworthy projects. The new fund is expected to allocate about 2/3 of its capital to seed investments, with the remainder reserved for liquid income-generating positions. Fisher's investment thesis hinges on the growing demand for yield-generating applications spurred by increased stablecoin adoption. He articulated a vision for Rockaway X to position itself as a leading expert in providing yield on-chain. Leveraging the firm's existing $100 million on-chain credit pool, which currently offers investors an attractive annualized return of approximately 12%. In conjunction with this funding announcement, the Solana Foundation has implemented a significant policy change regarding its validator program aimed at enhancing the network's decentralization. Under the new guidelines, for every new validator on board into the Solana Foundation Delegation Program SFDP, 3 existing validators will be removed if they fall below specific performance thresholds, such as having less than 1,000 SOL in external stake or being on the mainnet for over 18 months without active engagement. This initiative reflects a broader strategy to reduce reliance on foundation-backed delegations and encourage a more community-driven validator ecosystem. Ben Hawkins, head of staking ecosystem at Solana, underscored the importance of this transition, stating that it aligns with the network's ethos of decentralization and operational efficiency. By phasing out inactive validators, the foundation aims to foster a more vibrant and engaged community of validators, which is crucial for the network's resilience and performance. Lily Liu, president of the Solana Foundation, referred to the validators that would be removed under the new policy as Vino or validator in name only, highlighting the foundation's commitment to maintaining an active and effective validator network. As these developments unfold, the future of Solana appears promising, with Rockaway X's substantial investments signaling strong institutional interest in the blockchain's potential. Furthermore, the Solana Foundation's proactive measures to enhance decentralization may bolster confidence among users and developers alike, paving the way for more innovative applications and a robust ecosystem. As the landscape of blockchain technology continues to evolve, Solana's strategic initiatives and backing from influential firms like Rockaway X position it well for sustained growth and relevance in the competitive crypto space.